Anna Botin, thank you so much for joining Bloomberg for, I know, a little bit of time in a very, very busy day. So your new business plan has very ambitious cost cuts. Where are they going to come from?
So, the most important thing about today is we reiterated, because we had already announced our ROTE targets of 13 to 15%. And so that's a very important not commitment, but guideline we're giving to the market. In different areas, we're going to do different things. So Europe is half our business. So 50% of our profits come from Europe, but it's 70% of our lending. It's also 50% of our cost. And what we announced today was a very important step where we've said, on the basis of 2018 closing costs, which is 10 billion, a bit more, we're going to reduce by 1 billion over the next few years. So that's a 10% net reduction, very different from what other companies are announcing. And that is a lot of work, but we're confident we can do it.
But is that job losses or branch closures?
It's actually no. Part of it will be because it's Popular. So of the 1 billion, we've announced an extra 250 million for Popular. Remember when we raised capital 2 years ago, we said, we are going to deliver 13 to 14% ROTE. At the time, interest rates in Europe were expected to rise even this year, right? Actually, even last year. It was expected loan growth in Spain would grow in 2018 when it's been negative. So to make sure we can deliver the 13 to 14%, we've announced an extra 250, and that's Popular related. The details will be announced shortly. The other is basically technology, operations, common processes, working together across Europe.
But do you worry about a fragmented Europe?
Well, we're taking the opposite step. We've said we're going to create a leadership for Europe as a whole. And this is super important because it's going to allow us to really work together more across UK, Poland, Spain, Germany, all the countries. And that is the way we're going to achieve these savings.
If there is consolidation, and we hear about consolidation, for example, in the German market, if that is driven by nationalist interests instead of financial interests, does that impact Santander?
Look, consolidation is going to happen. The question is, how efficient is it when there is not a common market for services? I've said that many times. And Santander, we're the most valuable bank in the Eurozone. We have 2% deposit market share in Europe. Compare that to JP Morgan or B of A, it's very different. So yeah, we need integrated market for services before you can have this cross-border banking. What we've said today is that our expansion in Europe is going to come through Open Bank. Actually, today, and you can go online and check this, Open Bank is launching in Germany for friends and family. And by the way, we have a waiting list. So that's how we're going to expand in Europe in a low-cost way.
But if there's a wave of consolidation of M&A, will it impact, for example, the way that Santander is run? Will it still be a family-run business?
It's never been family-run for years. This is a professionally managed bank already for many years, and even more the last 4 years. It's we have 50%, actually 55% of institutional shareholders, and 45% retail. So the governance at Santander is way up there with the best of the best.
No, I think what I was trying to say was, will you be part of that wave of consolidation?
Oh, okay.
Right? Does it change the way that actually you look at the markets? And do you want to acquire? Is there a danger that actually parts of your business get acquired?
So, we have raised the profitability in most of our businesses in a huge way over the last 3 years. When I arrived, only 40% of our assets were above the cost of equity. Today, that number is 90%. We're managing the bank in a much more disciplined way in terms of regulatory capital, because that's something which is very scarce these days. So we have sold and bought a lot of assets over the last 3 years. We have sold WeSync, we have sold Quasar, which is the real estate business, to Blackstone from Popular. We have sold all funds. We have also acquired some banks and at very interesting prices, and we'll continue to do that. So it's not going to change.
Talk to me about your investment in digital. Does that mean you're expecting a wave of automation? And again, will that lead to job losses in, 10, 15 years, or could it come sooner?
So one of the big announcements today is that we're going to be investing 20 billion over the next few years in technology and digital. It's about 5 billion total per year, and of that, 2 billion is in digital. So the run the bank and transform the bank versus the investment for the future is quite a healthy ratio. And in terms of scale, by the way, we're right up there with the biggest banks in the world. So we'd be 4th or 5th in the US, depending on how you measure that. So we have enough scale to invest across the group, which is one of the ways, that we're aiming to work more for the countries like the US or other countries where we don't have, the profitability we want. So we're going to really take advantage of our size globally.
Your returns to shareholders is probably one of the highest out there compared to rivals. When will your share price follow?
Well, you tell me. It's a bit frustrating. We get put in the box of European banks, even though half our business is in the Americas. I believe it's a question of interest rates in Europe. We were at 7 euros 2-3 years ago. We have more capital, so we took our capital from 8.27 to 11.30. Our return on tangible equity went from 10 to 11.7. We're increasing cash dividend per share, and our share price is lower than a few years ago. Having said this, what's important is that our earnings per share in constant euros, because we also had adverse effects. So more capital, foreign exchange against us, and we delivered 55% earnings per share over this time period. And even in euros, it was above 20%. So, definitely the market should value us different than most European banks.
Is there anything that investors ask of you? Is it, is it what you do with the US bank? Is it something else? Is it capital? This seems to be, recurring.
Yeah. People ask about capital all the time. And so what I can say is first that, we're not getting from the supervisors still today a recognition for our diversification. Mm-hmm. However, the market does give us that recognition. If you look at the CDS for Santander, all the debt structure, it's actually trading at very low spreads, similar to banks that have 13-14% CET1, right? The second question is, what price do you pay to get to, let's say, 12% faster? So, do you sell a business that is actually going to deliver 11% return like the US? That's what we said today in 3 years. Is it worth it? That's the question. And finally, of course, our model is more predictable. I mean, this is Bloomberg data, and I always give you credit for that, by the way. If you look at Bloomberg data, earnings per share volatility over the last 20 years, it's your graph, we have 9% versus our peers 140%. And we grow earnings, right? We grow earnings not as much as the others, but we grow earnings 3-4 times, I think it is. This is what's important. We have a more predictable business model, requires less capital. We perform better under stress. So, we have delivered in the past, and I'm confident we will in the future.
Are you still bullish about Brazil?
I remember our conversation.
Yeah, this was right before the elections.
Yes.
Right?
Right before the elections and right before the country suffered one of the worst, recessions ever, and our bank did much better. This is the other thing about our business is that, we lend money in Europe and North America. We actually do a lot of transactional banking in Latin America. So only 30% of our loans are in Latin America. It's a very small balance sheet. There's a lot of upside for the future. That's why we're much more resilient to crises. And that's why today we announced our payment services division, which is super exciting, by the way. We're very big on this. People don't know that. But yes, to answer your question, yes, I think Brazil will continue to do well. And, we're now 20% ROTE, and we want to grow with the market.
In the US, you're sticking to your strategy in the US?
Yes, we are. And we have given a guidance of 11 to 13% ROTE at 11.5 CET1, because we have 17-18%. So, you need to look at the US with normalized capital, because there is a tax, which means that as long as we can keep the capital there, we're not going to bring it back.
Anna Botin, how many questions do you get from investors about Andrea Orcel?
Not a single one. And we spent 2 hours on Q&A, and we had all our big investors in the room. I think what's important today is that they have huge confidence in the team, and we actually had our head of technology, who's a German professional, our head of digital transformation, an American lady, Sergio Riala, our CEO in Brazil, and Ezequiel, our head of Open Bank. So actually, they were all here, but they were on stage. And so the key here is to see how the team is working together. And we have announced a more streamlined management, which is very important. As we always said, we want to accelerate execution. And really what we're doing with the new organization is ensuring that we can deliver that acceleration in execution. We know what we want to do. It's just a question of doing it and doing it better and faster.
But it means that your current chief executive, I mean, again, I've asked you, I think, in February, is he here to stay?
Yes.
Does he have the confidence of everyone? Do you feel like the Orchel question is settled, and will it be settled, legally with him?
I think we are moving forward, and the team is very comfortable. We have had just all our top team here yesterday. We now have a digital, video cast to the rest of the group. He is a great leader. We've worked great together, and we have an amazing team also working for him. So, we're very optimistic, even, I'd say, about the future.
What happens for Brexit? Have you considered the worst, and are you ready for it?
We have been working for months to ensure that all our customers, and we have a lot of retail customers, and we have a big bank here and in Spain, retail customers, small customers, small companies, big companies, that we are ready to service them. And I can tell you we are ready, and they can trust that the service will continue, whatever happens with Brexit.
Will it also impact, if there's a no-deal Brexit, does it impact operations in Europe?
So we've had to do some adjustments, but not as much as others. For us, actually, the ring fencing rules have been much more, let's say, onerous in terms of cost. And, we had to move a few people, but not many.
But on Coco's, right? So your decision not to call Coco bonds caused quite some waves.
Yes.
Bring us back to that decision.
So at the outset, we said we would take what made economic sense, and we would take all our stakeholders in consideration, and that's what we did. It was the first time since the Cocos were issued that the economic rationale made sense, and that's what we did. We have flexibility, and we will take that flexibility in the future to either do it or not. And so, we believe we did the right thing. And what we had said we would do when we issued the Cocos.
I mean, we went around the world in 10 minutes.
Yes.
What's your biggest concern in the next 12 months? Is it something that actually is not on our radar?
So, I think a concern for all of us is what happens with the exit of QE. That seems to be further down the road. And we've had a couple of sort of, alerts on that. And, within the banking sector, we have so much more capital, so much more compliance and conduct. It's more what is it that we're not seeing outside? What is going to cause that rush to the door that could be quite rocky? The longer the economy goes on, and the fact that it's cooling down a bit, I think actually is a good thing, because that could make for a more sustainable and a bit longer recovery. So that probably is a few years down the road, but it's very difficult to know. And I think it's a very it's unknown territory, and so. That volatility, if that causes investment decisions to be postponed, or, that could really take us into the next cycle, downward cycle. And I think the US is always ahead, right? So it's what happens in the US is what we always look to. And it seems to me that it's going to take at least 12 months, 18 months more until we have a change in the direction.
Botin, thank you so much for your time today.
Thank you.